Most Americans have no idea how we got into the economic mess we are in today. They see inflation, feel the pinch at the pump and grocery store, and know something is wrong. But what? I'm here to tell you. The US government is $36 trillion in debt, and our society is $102 trillion in debt because the system is performing exactly as designed. We have a system designed to create colossal amounts of debt, and it all starts with the Federal Reserve. When Americans discuss the economy, they often blame either the Democrats or the Republicans, but the institution with the most power over our economic system is the Federal Reserve. So what is the Federal Reserve? Most people would say it is an agency of the federal government, but that is not entirely accurate. The Federal Reserve itself has argued in court that it is not an agency of the federal government. The truth is that the Federal Reserve is a privately owned banking cartel, given a perpetual monopoly over our monetary system by the US Congress. This privately owned central bank has been destroying the value of the US dollar for decades, running our economy into the ground and driving the US government to the brink of bankruptcy. The Federal Reserve operates in great secrecy and acts as if it is not accountable to the American people. Yet the decisions that the Federal Reserve makes have a dramatic impact on the lives of every single American citizen. If you want to understand our economic problems, it is crucial to understand what the Federal Reserve is and how it is systematically destroying our economy. Once you understand the truth about the Federal Reserve, you will view economic issues differently. The Federal Reserve is the central pillar of our debt-based financial system. Our entire system is built on the idea that money is created through lending, and that lending creates debt. Every dollar in your wallet, every dollar in the government's coffers, is essentially borrowed into existence. This might not seem like a big deal at first, but the way the system is set up, there's always more debt than there is money to pay it back. This constant need to service the debt to make those interest payments is like a treadmill that we can't get off. It's why the national debt keeps going up, and why so many Americans struggle with credit card debt, student loans, and mortgages. And who benefits from this system? Those who lend the money, of course. They get to collect interest on money that they essentially created out of thin air. The Federal Reserve, and the banks it works with, have a monopoly on the creation of this debt-based money. They get to print the money, decide how much is in circulation, and lend it out, all while facing very little real competition. The government doesn't just get to whip up a fresh batch of Benjamins whenever it needs some cash. Instead, it has to borrow that money from the Federal Reserve and the banking system. This means the government is constantly going into debt to the very institutions that it's supposed to be regulating. It's a cozy little arrangement, as long as you're one of the foxes, that is. The power of money creation and debt creation is in the hands of private banks, not the government. The power to create the very lifeblood of our economy is not in the hands of elected officials, but in the hands of private corporations whose primary interest is making a profit. These are massive financial institutions with the power to make or break entire economies. When these institutions have a monopoly on something as fundamental as money creation, it gives them an unhealthy amount of power and influence over all of us. It's like letting a private company control the water supply. In the case of the Federal Reserve, we've seen time and time again that the needs of the people tend to come in a distant second. The Federal Reserve likes to present itself as a neutral arbiter of the economy, a benevolent institution just trying to keep things running smoothly. But the Fed is essentially a tool that enables others to make obscene amounts of money. The Fed gets to control the flow of that money, and guess who benefits the most from that flow? The big banks and financial institutions that are already swimming in cash. They get access to cheap credit, they get bailed out when they make risky bets, and they get to influence monetary policy in their favor. It's a sweet deal if you can get it, but for the rest of us it just means higher prices, stagnant wages, and a financial system that's rigged against us. The Fed is not a profit-making institution, but it enables others to profit immensely. The Federal Reserve is the engine that keeps the debt machine chugging along. It's a perpetual debt machine, constantly pumping more and more debt into the system. One way it does this is through its control of interest rates. When the Fed lowers interest rates, it makes borrowing cheaper, which encourages businesses and consumers to take on more debt. This can stimulate economic growth, but it also creates a dangerous cycle of dependence on debt. The more debt we take on, the more we need to borrow in the future just to service that debt. It's like being stuck in quicksand. The more you struggle, the deeper you sink. The Fed knows exactly what it's doing, and continues to perpetuate this system because it benefits the very institutions that they're supposed to be regulating. The Federal Reserve System is designed to cause inflation. A little bit of inflation is normal, even healthy in a growing economy. But when inflation gets out of control, it can be devastating. It erodes the value of our savings, makes it harder to make ends meet, and disproportionately hurts those on fixed incomes. When the Fed pumps more money into the economy, it devalues the money that's already out there. And guess what happens when the value of our money goes down? Prices go up. Let's talk about everyone's favorite monetary experiment, quantitative easing. In a nutshell, quantitative easing, or QE, is a fancy way of saying that the Federal Reserve is creating money out of thin air and using it to buy up assets like government bonds and mortgage-backed securities. The Fed argues that this is necessary to stimulate the economy and prevent deflation. But critics argue that it's nothing more than a massive giveaway to the banks and a recipe for inflation. The track record for QE isn't exactly stellar. It's like giving a bunch of sugar-crazed toddlers unlimited access to the cookie jar. Eventually, they're going to crash hard. The Federal Reserve is about as democratic as a banana republic. The people who run the Fed are not elected officials. They're appointed by the president and confirmed by the Senate, but after that, they're pretty much free to do as they please. They operate in secrecy, their meetings are closed to the public, and they have a long history of resisting any attempts at meaningful oversight. It's like a shadowy cabal making decisions that affect all of our lives, and we're just supposed to trust that they know what they're doing. Spoiler alert, they don't. The Fed is unelected, unaccountable, and largely unanswerable to the American people. The Federal Reserve runs the U.S. economy. They control the money supply, set interest rates, and have a tremendous amount of influence over government spending. In theory, they're supposed to use these powers to promote economic growth, keep inflation in check, and maintain a stable financial system. But the Fed's actions often benefit the wealthy and powerful at the expense of everyone else. They bail out the big banks, prop up the stock market, and turn a blind eye to rampant speculation and financial chicanery. It's enough to make you wonder whose side they're really on. The Federal Reserve favors the big banks. The Fed provides cheap credit to the big banks, bails them out when they make risky bets, and turns a blind eye to their predatory lending practices. It's a classic case of regulatory capture. The regulators become beholden to the very institutions that they're supposed to be regulating. And who loses out in this cozy little arrangement? The American people. We're the ones who end up footing the bill for the bailouts and suffering when the economy tanks. The worse the debt problems caused by the Federal Reserve become, the more money the IRS needs to collect from the rest of us. The Fed enables the government to spend money it doesn't have, which leads to more debt, which leads to higher taxes. A large portion of our tax dollars goes towards servicing the interest on the national debt that was largely created by the Fed's policies. It's like working extra shifts just to make the minimum payment on your credit card. It's not getting you anywhere. The Federal Reserve creates artificial financial bubbles. They do this by keeping interest rates artificially low for extended periods. This encourages excessive borrowing and risk-taking as investors chase returns in a yield-starved environment. These bubbles might create the illusion of prosperity for a while, but they're ultimately unsustainable. And when they burst, as they inevitably do, it's the average person who's left holding the bag. We lose our jobs, our homes, and our savings, while the big banks and financial institutions often walk away relatively unscathed. The Federal Reserve is about as pro-free market as a communist collective farm. Despite what its defenders might tell you, the Fed is the very antithesis of a free market institution. It's a central planner's dream, a way to manipulate and control the economy from the top down. The Fed's actions often distort the market, create moral hazard, and stifle innovation. They pick winners and losers, prop up failing businesses, and create a system where cronyism and connections matter more than hard work and innovation. It's the opposite of a level playing field. The Federal Reserve tells the rest of our banks what to do. It's like the strict headmaster of a boarding school, except instead of making students wear uniforms, it's dictating lending practices and reserve requirements. The Fed sets the rules of the game, and the banks are expected to play by them. In practice, it often stifles competition, limits innovation, and creates a system where the big banks have a significant advantage over smaller institutions. It's like having the referees in a football game consistently favor one team over the other. The people currently running the Federal Reserve pretty much have no idea what they are doing. These are people who are supposed to be the best and brightest minds in finance and economics. They have PhDs, they've written books, they've taught at prestigious universities. But despite all their credentials, they seem to make one boneheaded decision after another. They create asset bubbles, misjudge inflation, fail to predict recessions, and consistently underestimate the negative consequences of their own policies. It's like watching a group of highly trained surgeons try to perform brain surgery with a rusty spoon. The intentions might be good, but the results are likely to be disastrous. Even though the Federal Reserve has such extraordinary power over the financial system, the American people are not permitted to examine their books. The Fed operates with a level of secrecy that would make even the CIA blush. They claim that this secrecy is necessary to protect the integrity of the financial system. But it's hard not to be suspicious when an institution that wields so much power is also so determined to avoid any real scrutiny. What are they hiding? What are they afraid we might find? These are questions that every American should be asking. The Federal Reserve has way too much power. It's an unelected, unaccountable institution that controls the very lifeblood of our economy. It can create money out of thin air, manipulate interest rates, and bail out failing businesses. When you concentrate so much power in the hands of so few, it's a recipe for disaster. It's time to have a serious conversation about the role of the Federal Reserve, and whether it's time to rein in its power. The Federal Reserve is dominated by Wall Street and the New York banks. It's a revolving door between the Fed and the big banks, with former Fed officials taking lucrative jobs on Wall Street and Wall Street executives being appointed to key positions within the Fed. This cozy relationship creates a clear conflict of interest, as those in charge of regulating the financial system are often the same people who benefit most from its excesses. It's time to break this cycle of cronyism and corruption and create a Federal Reserve that truly serves the interests of the American people. The Federal Reserve has brought us to the brink of economic collapse. Their policies have led to inflation, bubbles, and a financial system that is addicted to debt. They have eroded the value of our savings, bailed out their cronies on Wall Street, and saddled future generations with mountains of debt. It's time to hold them accountable for their actions, demand change, and create a financial system that works for all of us, not just the wealthy and well-connected. Hopefully this video will help people understand our debt-based financial system a little bit better. Until we fundamentally change our system, many of the economic and financial problems that we are currently experiencing will never go away. By allowing ourselves to become enslaved to debt, we have become the servants of the international banking system. We owe it to future generations to fix the problems that we have created. That is why so many of us believe that it is time for the US Congress to shut down the Federal Reserve. Our current financial system is a complete and utter failure, and we need to start over.